What's up, guys? Welcome to another live session. Today is February 24th, 2020, and we're back again on the charts. And what a weekend has it been. It's just ridiculous. We have so much to talk about. But first things first, if you're watching on YouTube, make sure you subscribe, like, and comment. We'll be choosing last week's winner on Discord later today, so make sure you like, subscribe, and comment. That's an easy way to get a free month of full access on our trading room. Also, our Discord is up, running nice and smoothly. We have all our signals there. We have people talking about trades. All our providers are there. If you want to get on our Discord and talk about trade ideas throughout the day, share chart work, all that good stuff, make sure you go to forexlens.com/discord-sign-up and fill out this form. I'll leave this link in the description below. All the links discussed in this video, so you can go refer to them after the live session. But make sure you go ahead and sign up for our Discord. It's free, so you can definitely sign up, and we'll be onboarding people as they come. So make sure you do that. And also, our Forex trading room. If you don't know about that, this is where our live sessions are actually hosted Monday through Friday, and this is where I get to talk with all my people on the portal. So I'm just gonna let a few more minutes go by, just get people coming in, and then we'll get into the goodies of this session. So I hope you guys had a great weekend. Last week was great. We had a fabulous week, 0 losing trades, and we were just short of our target of 300 pips per week. But 250 is not bad, and considering how the markets are moving right now, very volatile, I think we mitigated our risk very well and didn't overtrade, because it's very easy to do that, especially when you have things like coronavirus, and it's going to be pretty chaotic this next few quarters depending on how long this thing lasts. But we'll get on to that. Let me just say good morning to my portal members. This is the portal I was talking about, and we already have people chatting away. That's awesome. So we have some pound yen. People think it's bullish. Alright, so let's go. Okay, so if you guys haven't realized, on the charts there have been gaps, mainly the gold and Aussie dollar. As you can see, gold has gapped up 400 pips over the weekend. It was at 1643 when as high as 1680. I think on Thursday last week we had a long for gold from 1620 to 1650. That was a very easy trade that was done and dusted. And after getting out of that trade over the weekend, this thing jumped. And the reason being, and we'll go through a lot of them. So China coronavirus outbreak, all updates. This is on Al Jazeera. I'll post this link in the description too, so you guys can check it out. But these are all the updates. And so basically, White House may seek $1 billion for coronavirus response. World must prepare for potential pandemic. World Health Organization chief, also the health official for Australia, said it's not a possibility of a pandemic. It's inevitable. It's pretty much written in stone that it's probably likely it's going to happen. So we should be preparing for a potential pandemic. It's getting pretty crazy. Health ministers from Italy, nearby countries to meet. So Italy, I think they had their 6th death today, and then suspends airlinks with Iran. So Iran had 7 people die, but there's a belief that they're actually covering up 50 deaths. So it's pretty ridiculous. And see, Iran denies virus cover-up after claims of 50 deaths. We keep going along. You can see 6 person dies in Italy. So, and Vietnam tells banks to cut or delay loan payments from virus-hit firms. Hong Kong to bar non-resident arrival from South Korea. China says more than 3,000 medical staff infected. That is huge. These are people that are treating the infected. If these guys are infected, they can't do anything. It's pretty crazy. So all across the globe, it is just terrible. It's spreading. For example, Iran last week only had 9 cases, and now it's at possibly 50 deaths. And obviously certain countries with not as established medical equipment and sophistication are going to suffer the most. So the Middle East could really be affected, as people in Iran have been affected. And then places like Africa, if it does get crazy there, it could be pretty outrageous too, the numbers. So this is definitely the reason why the markets are where they are. The Dow Jones, the stock market, everything's down. It's a bear market, and this is what we're going to take advantage of. just to be as as morally sound as possible. We're traders. We have to take advantage of these kind of events, and we'll go into the charts in a bit. But guys, this coronavirus stuff is very serious. Definitely something that won't blow over. Okay, so we know about gold. I just want to show the gap. We'll do an analysis of gold at the end, but I wanted to first look at a few pairs of interest. Was Aussie dollar. Now Aussie dollar, we're actually in a mega swing trade for this pair, and it's good for us, really good for us. So last week when we entered Aussie dollar short, pop the 4-hour, we gave a swing trade on our Telegram and Discord, and so there was an intraday level which got hit, first take profit. For the intraday folks, they were out of that trade and they got stopped at entry. For us swing traders, including me, we were going to hold this trade throughout the weekend. If you see Friday's recap, I say right here, the only trades we are holding is USD CAD and Aussie dollar. We will be closing USD CAD by the end of the day. We will continue to hold Aussie dollar throughout the weekend, as this trade is a swing trade. Okay guys, so Aussie dollar is the only trade you should be in right now, and you can see over the weekend we did gap down below. This broker is not showing it, but my broker and some of the other brokers on MetaTrader 4 will show the gap down from up here. So that's just because of the coronavirus numbers, and the severity is increasing as the days go by. So for our swing trade, this is looking like it's in good shape. We may have a retrace, a semi-decent retrace to this high, but overall the idea still stands. The daily, you can see we've printed 2 hammers now, back-to-back hammers, so there is a potential for a retrace. I wouldn't be surprised if there is, but that's the nature of holding swing trades. You just hold it through, through the retraces and the sell-offs. It's just part of the game, but the overall payoff, you have to go all the way to the monthly to see the overall trade idea is substantial, and it's going to be worth it. So this is this is squished in. This is a 2.72 R2R setup, and this is the exact signal we sent in. So the first intraday level was hit. We have all these levels to take care of. So the monthly still looks fine, the weekly still looks fine, but there may be just a retrace before we go lower. Completely well within the terms of price action. Now if we talk about the fundamental schedule in terms of non-coronavirus stuff, they had the European German business climate 96.1. That's actually pretty good for the euro. The rest of the day is quiet. Let's take a look at Tuesday. Tuesday is also pretty quiet other than consumer confidence in the morning, and it's looking like it's going to be better than the previous month. So dollar strength is great for the Aussie dollar short. Wednesday is also pretty quiet until you get some NSD stuff coming in later and some Aussie private capital expenditure. So this will be a main event for us as well. Thursday, pretty quiet. We got core durable good orders, but it's a medium event. It's nothing red folder. And then Friday, CAD GDP, and then some Chinese manufacturing, which I believe this will be lower than its norms, obviously because of the coronavirus. So this week is pretty quiet in terms of news, which is great for us. Our biases won't change too much, but for those that aren't in the swing trade, go ahead and enter. I'll expand this out to show you the stop loss. This is a stop loss right here. The entry is now if you haven't entered, and then each level after entry is a take profit. I'll actually just show you the specific signal that we called right here. Okay, and these are all sent on Discord and Telegram, guys. And at the end of the session, I'll be giving a 50% coupon code on how to join us and take advantage. For those that are watching on YouTube, I have not forgotten about you. I will answer all your questions as I go through this. Gold, DJ Enzo, that's the coronavirus. It does feel like a zombie apocalypse. Justin Lang asks, why do the markets gap for some pairs of the weekend and not others? Because some pairs are more affected by the coronavirus, and if I were to write a list, this would be the list. Why not, so first, obviously, if you trade the Chinese currency, the yuan, then obviously that's gonna be most affected. But mainly, I'd say Chinese currency, the Aussie dollar, and then the Swiss and the yen as safe havens, and then the US dollar. Okay, I think these are the pairs, and then obviously you can put gold because it's acts as a safe hand as well. XAUSD, gold. Okay, these are the pairs that are affected right now because obviously we'll start off. Trading Fund's been doing this. Okay, so obviously the China's being affected. Their overall exports have decreased substantially. Then the Aussie dollar, because their biggest trade partner is China. If China's exports are reduced, then obviously the Aussie dollar will suffer. Then you have the safe havens. As you guys know, when there's any global crisis, trade war, world war, pandemic, epidemic, these safe havens always prosper. People move away from risk-seeking currencies and go to the safe havens, which are the yens and the Swiss francs of the world. Okay, and then you have the dollar, which is considered a safe haven, but obviously when there's a lot of uncertainty, people sell U.S. dollar bonds and go to the yens. And also, the dollar is also affected because they are a trade partner with China, and they just signed phase 1 of their deal, so they're going to be affected as well. And then gold. Gold is your Class A safe haven. No matter what happens, gold is going to be there, and it's always going to appreciate. And so that's why I think gold is going to be mostly affected too. And you see how much it gapped. And those are probably the hierarchy of the currencies. You might see some slight variations in other currencies just because of trade partners and correlations, but these right here are the main ones affected, and these are the ones we're going to take advantage of. I do have a juicy setup for USD CHF and Aussie yen I'm going to look at, but that was a really good question. So yeah, let me go through this, guys. That was a definitely great question. And so let me look at USD CHF. Again, we're only holding Aussie dollar swing from last week. That's it. Okay, guys, make sure you're not in any other trade. We made this very clear in Friday's session. So Aussie CHF, as you guys could tell, I am looking for a short on this trade. Just from the daily time frame, you can see we had a kind of a break of this daily range. Back in November, we had a sell-off, come to some support, and then when we came back up to this previous daily range, we're getting a rejection, a nice rejection. So it's looking like a classic. Let me try to draw this out for you guys. So this is the trading range we had back in 2019 during the last quarter, right? And then this is what we had. We had the break of it. And now we're having the retest, and obviously we had a nice rejection. So I'm looking to go lower, and the entry criteria is very simple, guys. You can see how we have these two wicks that have created highs at the start of the year, and basically any closure below these wicks, bearish ideally, is going to take us lower. Okay, so let's take a look at the 4-hour. So you can see the overall gap. The gap in the market from the coronavirus stuff, and today is Monday, so the markets are just starting to react and kind of break down what just happened over the weekend. So it might be a bit consolidated, it might be a bit even volatile, randomly volatile, as the markets start to piece together what just happened. So that's gonna be good for us because there's no entry right now. Obviously the entry is gonna be once we get down here. I think that's when we get the sell-off happen. So we're going to be targeting this kind of zone right here from this trading range from the top all the way to the bottom, and it's going to be the simple setup that I'm going to take for this week. All chart work, as always, will be sent on Discord and Telegram after the session. But yeah, 4.7 R to R. So even if we do have a push down like this and we get stopped out, the stop loss is so small compared to the payoff that this setup, you'll take it every single day, every time you see it. So this is the setup I see right now. I'll plot some take profit levels. So I'm just looking at areas where wicks have accumulated, and for one, I'd probably choose right here. These last few wicks. The last time we made a push down below, we made a rally from here. So this will be a smart take profit one right down here. And the next one will be where else the wicks accumulated. We have some solid resistance up here, and that'll be our next take profit 2. So take profit 2 right here, and then you do the same thing again, and then one TP3 before our final target is down here. Okay, a lot of wicks, and that's your trade idea. So entry would be somewhere around here. Bearish closure, take profit 1, take profit 2, take profit 3, and then long term take profit 4. This is USD CHF, so it may take a few days to play out this range. If you look in the past, it took over 2 weeks to fill out this range. So this could be considered a swing trade, even though it's not really. But USD CHF doesn't move too much per pip, so that's why. So this will be saved and sent in on Telegram and Discord to all the members, so they have something to refer to. And Jesus, save this, and I'm gonna put an alert just to give me kind of just a heads up that when the trade pushes down here, you guys could do that as well. So I'm gonna do, this is the value, 0.97554, crossing down. Alright, so I'm gonna go over some questions that you guys have. Those two pairs are the ones I'm looking out for most. Yeah, the live should be working, guys. Make sure it's the right link. I'm great. Okay, so people on YouTube have a question. Pound yen is really, I mean, yen is really strong. People are dieting all over it. We need to take advantage of that. Yeah, we do. So if you guys remember on Friday's session, I was really interested about going short on pound yen. Let's see what has happened since then, and it has melted. Absolutely has melted. Oh no, I wanted to go long, but I asked you guys should I enter, and you guys said no. I had to rely on you guys. But yeah, on Friday's session we had a chance to go long, but we don't enter trades on Fridays, and for good reason, right? For good reason, because this thing over the weekend just melted, and this could be a solid short setup, no doubt about it. As you can see, this was the possible trade idea we had. Rejection at 144.600, short to 142.249, and we've come close to that level already, so that's pretty awesome. There's probably no entry right now just because we're coming to that target zone, but the yen is definitely strong. Let's take a look at USD yen, see how that is doing. Completely melted, eh? And this was when the dollar was having his rally. Completely melted. That is ridiculous. And see, so this type of price action is it's kind of hard to judge, because I mean, you have these huge bullish candles, and then you have these these significant bearish candles coming as well. And this is all fundamentally driven. I don't see any entry to go short because the next significant level is down here at these highs, and we're already halfway there. But my oh my. Let's take a look at euro. Euro's rebounding because of the dollar. Nothing too significant. I think the euro is going to continue going lower because as cases spread into Europe, the euro will definitely be affected. Let's see a pound. Pound doesn't look like it really cares too much. That's some early price action for the pound. Just want to find maybe one more setup for you guys before we end this session. I will be giving a 50% coupon code at the end of the session, so stay tuned for that. NSD USD, we already exited that trade already. It's just resting at support. Let's take a look at USD CAD since we were in that trade. Right here. So we were on this trade Friday. We closed out by end of day, and we closed out in profit. This was Friday's closure. Over the weekend, it gapped up, and then Sunday made a pretty decent sized rally to 1.33055. And since then, it's came back down. So this is why we made a good decision of leaving this trade as it was on Friday. We're already in profit, so no point of getting greedy. This idea still stands to swing short as long as this daily closure, ends bearish, and we come back down somewhere here, near these lows. Then we can continue down lower, because this could make a push back up. But again, fundamentally driven, not much that we can do. We can just control what the technicals say. And so if we come back down maybe to 1.32088, and we can continue this short swing trade idea. But I'll be the judge of that, guys. Don't worry about figuring this trade out. I'll let you guys know. So at this point, if anyone has any pair recommendations, any pairs you want me to look at, shoot them my way. I'll be doing a full top-down analysis showing you our trading strategy. So send that out while I cover. I think USD CAD's done. I was gonna cover maybe the potential to go long, but I don't see it. This resistance is way too strong for you to even go up here unless something drastic happens. Could you give us a short-term buys on GU? GBP CAD. Okay, yep. A lot of questions coming in. Marco, GBP CAD, I'll give that a look. And then someone also asked for GU short term. I'll give that a look. Do I think gold is hitting 1800? Absolutely it will. Okay, bunch of pairs coming in. So Aussie NSD, oil. Okay, so we have a lot of stuff coming in. So I'll try to be as quick and efficient as I can. So this is our old chart. We did a new one recently. Where did it go? Wait, this one right here. So our bias for gold, this was our new chart for 2020. For pound dollar. Let's start all the way on the monthly real quickly. And so our bias for pound dollar has been short, okay? You can see a long-term break of a downtrend in 2014. This popped up during Boris Johnson's election. And since then, we've come back down. We've reacted pretty significantly to 1.33560. Okay, and you can see price needs a break below 1.26900 for us to go short down to these all-time lows. These are all-time lows for the pound dollar. It's never gone any lower than where it has here. Okay, so it's a pretty interesting spot we're in. Let's take a look at the daily, something more short-term. So you can see on the daily we have two regions of significance right now. This daily support right here, which has kind of held up pound dollar from dropping any lower, and also this kind of resistance up here. As you can see, if I extend this over, this resistance takes account for these highs here as well. So for us, the bias is still the same. We want a closure below 1.28500. Okay, and we're coming pretty close to that. We're maybe just over 80 pips away, and I think that might be my bias for the medium term. I guess short term, you could potentially long back up to these highs, and now is not a bad time to enter. Actually, it's not a bad intraday setup. Something like this, 2.93. Just targeting from here to here. We have a nice reversal candle right here, and a nice bullish engulfing candle. Not a bad setup, but this is going against our long-term bias, which is short. So that's why I usually don't like taking these setups. But if you're into intraday setups and you don't mind a 3.0 R to R setup, go ahead. It could happen. Let's just take a look at the 1 hour, see if it's any funny business going on. See on the 1 hour, I would like this thing to actually come back here, come into the meat of this zone, and then look for buy signs to go up higher. Just because we haven't come fully to the support yet, we've come pretty close, but there. So in order just to avoid any fake outs and just to improve our R to R, it'd be better to wait. Sorry guys, I'm trying to adjust this. It'd be better to wait for us to get to support before we go higher. So if you see this, if we wait for the price to come back down here like it did in the past and then show bullish signs, then our R2R will be much better for this trade. Right? It's almost a 4.0, and so I think that would be the best case scenario. Right now I'm not really buying this move too much. But even then, if you take this setup, you have a 3.0. If you take this setup, you're going to have a 4.0. So either or is fine. But my long-term bias is short, so that's just my opinion. I'm not going to be entering long. Someone asked for GBP CAD. Let's give that a look. I'm pretty sure this thing was melting last week, because we wanted to enter it, but it was too volatile that we never really got. So GBP CAD, very similar idea, and don't mind these miniature lines. These are just for price action purposes, but these are two zones we've had. This one right here, this one right here, and the bias was short if we got a closure below 1.71700 on the 4-hour time frame. If you take a look at the daily and then the 4-hour, we can see, the daily, when we broke below, this was not a bearish candle closure. This candle right here is not bearish, so you should not be entering this trade, and that's why we didn't get the short trade that play out, right? So we had this thing push back up. Depending on how the CAD does this week, it will tell the tale. Right now, I do think it kind of created a head and shoulders. If you see on the 4-hour, head, shoulder, shoulder. So it could just be retesting the neckline before it goes lower. But just based off the higher time frames, it looks like a short. And so on the 4-hour, we had the bearish closure, and we got an entry, and it did go 60 pips into profit, right? The first time around, we waited for a 4-hour bearish closure. We got that. I didn't get to enter this trade because it happened so quick and I was asleep, but we did get 60 pips out of it, but we reverted back since then. And if you can see, there is a pretty ugly, but it's still there, head and shoulders. It's not the best one, but here's your head, here's your left shoulder, here's your right shoulder, and you can see your neckline is actually all the way down here. And so we did have a break of the neckline, even a retest rejection, but we've popped back up since. And so I don't know, I mixed. Long term is still short. I mean, it's still making higher highs, higher lows, higher highs, higher lows. I mean, lower highs, lower lows. You can see lower high, lower low, lower high. This could just mean a next lower low creating. So for us to go short again as a new trade idea, I'd wait for something like this. A break pass below this previous low. Get a horizontal array, it's an exact level for you guys. So a bearish break below 1.7200 will take us lower, okay? And that will confirm that we're still following that price structure of lower highs, lower lows, lower highs, lower lows, okay? But the long-term bias, obviously from the higher time frames, is still short. And given the fundamentals with the Brexit deal just happening, and European Union and the UK are kind of figuring out what's going to happen with trade deals and etc., the bias is short. Let's continue on. What else did you guys want me to see? Someone said oil, Aussie NSD. Swing short as long as it's... Oops, my bad guys. This software is tradingview.com. It's not a software, it's just a website. If you check the bio or the description of this video, you'll see an affiliate link. If it's not there, I'll post it after this session's recorded and post it on our YouTube. But we have an affiliate link for our TradingView. That is the software I'm using. I highly recommend it. Aussie NSD, let's take a look. So without checking, I'm pretty sure Aussie NSD is probably going down, and it's actually pretty mixed. Oh, that makes sense because the New Zealand dollar is also correlated. So this is a pretty nice chart from the weekly time frame. These are good levels, good resistance region, good support region. And now if you ask any beginner trader what do they see here, they would probably say it could go long, right? Because if you see last week when we had this bullish closure, this is a bullish engulfing candle off the support. We did have a decent sized rally, almost 90 pips, right? A rally. And for Aussie NSD, 90 pips is a lot of movement. So we had a nice rally, long trade off this weekly time frame, just from our support region and this bullish engulfing candle, right? So support region right here, bullish engulfing candle. It's bigger than this candle. You go long, you made 90 pips. Since then, we have hit some intraday hourly resistance, depicted by this horizontal array. And as you can see right off the bat, I have a hinge that we could probably have a nice short trade. So you guys remember we were looking to short this in case we got a bearish closure on the daily below our support region. We did not get it, so this trade was not going to be available for us. So look at the daily. You can see there is a potential to short from here back down to this to the very bottom of this resistance support zone, and so I might be down to call this trade right now. Actually, 4 hour. Let's take a look at the 4 hour. Pull this back in. This is where you take some time to see. You use your third eye. What do you guys think? For whoever asked, I would love to know your advice. Metric Quineller. Hopefully I'm saying that right. What do you think for Aussie NSD? I'm thinking maybe a short. I mean, the Aussie dollar is suffering right now. We do have some technicals coming in play. The only thing that kind of concerns me is the support that we've kind of created here. Right? We've created some significant support here. A lot of wicks back in December. A lot of wicks. And we come here, we have a rally. We come here, we have a rally. We come here, we have a rally. We break down below here. We close back above. We have a rally. Resistance. Come back up here. Use the support. Rally. So this is a significant support. And we're about 13 pips away. So you guys know Aussie NSD doesn't move too much per pip. On an 8-hour time frame, the distance from here to here is usually maybe 60 pips for most pairs, but for Aussie NSD it's only 13 pips. So for me, it's not worth it to take the trade unless we get a bearish closure down here. Then we can target from here all the way to here, and that'll be a 90 pip gain. So it's all about payoffs and risk. And so the better risk is to take a trade from here down all the way to here, and instead of taking it from up here. So that's just my opinion, and it's pretty consistent for many of these pairs, like the CAD CHF and USD CHF, where they don't move too much per pip. So this is what I think Aussie NSD could have in store for us, maybe in the next few days or even the next day or so. But a bearish candle closure on the 8-hour time frame is going to be key. Okay. And I mean bearish candle closure because in the past we've had a lot of wicks, a lot of fake outs before you go higher, a lot of fake outs here. And then when we had a bearish candle closure, we did go lower. Bearish candle closure, we went lower. You can see that multiple times. In certain instances, that does not happen, but that's fine because you would have lost this trade, you would have won this trade, you would have won this trade, you would have won this trade. So you get the idea. You would even won this trade because it went into maybe 60 pips before reverting back. So we're just playing the probability, guys, and so this could be a potential setup. The bias is still short in my opinion, at least for the intraday. The only time we'll be doing longs is if we close above this hourly resistance. Okay, and that'll be sent on trade on Discord and Telegram as well. Is this still live? Yes, this is very live. We are live. I was long but turned bad, so you probably did take the long off the weekly time frame. This is why I like to take profits every 25 pips. That's just the best way to make sure you take what the market gives you. Don't get greedy. Someone asked for oil. I'll give that a look. Let's see if someone GBP CAD. Okay, so alright, so awesome. If you're having trouble with the streams, I'm checking it's all green. Might want to check your internet, maybe try a different browser, refresh the page. But we are live and well. So oil, our favorite, our Bay oil, one of our favorite commodities. We've been pretty much spot on. Let's take a look at oil. Ooh, oil has a chance to short. So if you guys remember last week when the CAD was dominating, we had a potential to go long if we got a break above 56.15. You can see here bullish closure above 56.15 equal go long to 64. Obviously we did not get that, so I'm gonna remove this for now. I'll keep the alerts because if we do get up there, the trade idea is still valid. But right now, based on the coronavirus, people's need for oil goes down considerably. Global trade goes down, and obviously U.S. oil, the price is gonna slump. And as you can see, guys, during the peak of the coronavirus, or the peak at the start of the year, it pushed U.S. oil all the way down to 49.47 per barrel. Okay, that's pretty dang cheap for a barrel of oil. I'm considering, back in the start of the year, we were all the way up at 64.26. So it's almost lost 30% of its value in a month's time. That's pretty crazy. It lost 30% of its value in almost a month's time, and that's just because of coronavirus. It happens. These kind of tragedies always happen. You saw it with the U.S.-Iran stuff when they went on their mini war. It happened during SARS. It happened during Mars. This thing is very reactionary to the global markets, and so there is a good probability to short this. As you can see on the left, you guys remember when we've come up to these highs in the past, and this is in 2018, you had U.S. oil break this major support, right? You can see it's a major support here. Break it, come up, retest it, and then short. After breaking this last set of support at 51.25, it just plunged. It just plunged all the way down to this monthly support at 43.95. And you can see, if you look to the right, we had a similar thing, a huge push down, a retest of this blue zone, and we're currently rejecting. So we could have, guys, the swing short of the long time, basically of a lifetime. Basically, swing this, long gold, and buy a Lambo. That's pretty much it. Swing this, buy gold, and you have a Lambo in 2 days. I'm joking, but maybe in a year or two. This could happen, guys. So I just want to check the monthly before I overreact, but this is very similar to what I saw for gold. And I mean, I gotta change the song. I don't like this song at all. Hold on. Did not like that song. Alright, cool. I like that chill stuff. Anyway, so yeah, from the monthly time frame, guys, the top-down analysis still stands. Dating back to 2014, significant downtrend for U.S. oil. And we had previous attempts to go higher, but we've always closed down below the trend line. Okay, guys. And the monthly time frame, you ask any beginner trader, what do they see here? Trading with the trend. You're coming into a new trading range. It's a short. Even the candle is a teardrop candle, I like to call it. It's the second most bearish candle there is. If the monthly closes this way, guys, this is my prediction for 2020 for U.S. oil. I'm going to maybe $44 per barrel, $44 per barrel. As you guys know, my gold prediction for 2020 is 1,800, and we went pretty close. We're at, I think, 1670 right now. So once you use price action on the higher time frames, it all makes sense. And yeah, that's what I see. So let's maybe look for some intraday entries. I doubt there will be right now just because of the initial gap up. But as you can see, we have this huge gap, and gaps don't always get filled. They actually did a study. They get filled maybe 60% of the time, but sometimes it may take a few days all the way to a few years to fill a gap. So just a word of caution, but it's not a bad time to enter right now in the daily. This daily candle is as bearish as it gets. Very little wick to the top or bottom. Just a solid bearish candle body. Let's take a look at the 4 hour. So here's the gap you saw in the market open on Sunday. Looking to the left, let's see. The next support is obviously down here, so I'm going to be looking at that as a key support. And so if we were to enter short right now, where would our stop loss be? Our stop loss would probably be at this resistance over here. So you have a bunch of highs in this area. So if you just plot that, right, and if you were to go short for this intraday setup, you'd right off the bat see that in terms of risk to reward, it is not worth it. It's a 0.59. You would never enter this setup. Even scalpers don't enter these type of setups. So what I would wait for is probably this daily closure, just because there is a tendency for price to pull back during the end of New York session, or right at the end of New York session, for US oil to pull back and make a mini rally. I don't know if you guys noticed this, but it tends to happen. So I'd rather wait for today's daily closure and then maybe enter during Aussie, because you can still see we're still in that blue support region, right? And so as long as we don't come out of it, I don't want to short. If we break out of the blue support region, then we can go ahead and enter short and then target our long-term goal. So that is my opinion for US oil, but we're just waiting for this. A closure outside of this blue zone to target this as our first level, 49.88 per barrel, or you can just say $50 per barrel. Nice psychological level. And then going to the daily, you can see the overall target is all the way down here at $44 per barrel. So that's my opinion for US oil. Just too much going in the markets to jump in. It's only been a few hours into the trading week anyways. We have a lot of time, guys. So that's my analysis. So yeah, guys, make sure you smash the like button. I think at this point I'll be giving away the 50% coupon code for our Forex trading room. And if you're wondering what that Forex trading room is, a quick rundown. These sessions, like the one you watched today, happen every day of the week, Monday through Friday. Monday is a free session and Friday is a free session. Tuesday, Wednesday, Thursday is when we do our live entries, when we do the juicy, nice entries, nice trades, make all the profits. And Friday is when we go over the trades we took. So if you want all my teachings plus 5 signal providers, so if you guys see here, we have 5 different signal providers. RP Forex, that's me, Intrad, Vanity, Django, Campbell, Adam. These are all different type of traders, swing, intraday, high volume, low volume, all of that good stuff. You can get it for 50% off. So if you go to our website, forexlens.com, and this link will be in the description. This link exactly, forex-trading-room. And if you click get full access for as low as $74, if you fill out this form, the original price is actually $97 per month, okay? But with this coupon code, first 50, you'll get 50% off your first month. So instead of $97 for your first month, it'll actually be $48.50. So that's a pretty good steal for all this teaching. You get to ask me any questions, all these signals. I mean, you can't beat that value. So just use this coupon code. After you fill out this form, click next. You have a section called add a promo code and enter first 50. This is the number 0, not the letter O. The number 0, first 50. This will be in the description of the video as well. And you guys can join us for tomorrow's session, because we're going to have a lot of juicy entries in tomorrow's session. So don't miss out. And I think that's it, guys. Any last minute remarks, let me know. I'm RP Forex. I host these live sessions every day. For my paid members, I'll see you guys tomorrow. I'll be sending all the chart work. If you want to join our Discord channel and talk with everyone, and it is free, you can go ahead and use the sign up form. It's called forexlens.com/discord-signup. This will be in the description as well. Go ahead and enter and we'll add you in. So I'll see all my paid members tomorrow. The free members, I'll see you on Friday. But I do recommend you take advantage of the first 50. So be safe, guys. The markets are wild. Don't overtrade and don't get too greedy, because anything can change in a click of a button. So that's it, guys. Have a great day, and we will regroup tomorrow. Peace and happy trading.